Question 3 is actually the longest question out of all of them. This one was 46 minutes. This was 38 marks. We've got information. Remember, exam technique, go to the required. What do they want here? Statement of financial position, and they want the note for PPE. A total column need not be shown, so you don't need the total column, but you need all the columns for the different assets. Okay, so start with statement of financial position. Okay, you'd be writing down all your headings. Assets, non-current, then current, total assets, okay, and then equity and liabilities, then we have equity on its own, then we've got liabilities, non-current and current, okay, and then we'll have total equity and liabilities. Total equity and liabilities. Okay, column there for the total, column here for the total. Right, we can maybe put columns here, okay, but no, it'll look a bit funny. Let's just highlight it. Okay, I'll highlight it later when we do the totaling. Okay, there's the first bit. That's exam technique. Draw up A, which is statement of financial position. Then draw up B. So B is property, plant and equipment. Okay, that's the notes. Notes. Let's write that down. Notes. Okay, so what does that look like? Well, balance. See, this is what you would be learning. Beginning of the year. What is the beginning of the year? If it's 30th of Jan, it'll be 1st of July. 1st July 2015. Last year. Beginning of last year. Well, this year. And then balance. This will be 30 June 2016. Okay, then you'll have carrying amount. Well, that is the carrying value. Balance is the carrying value. Then you'll have cost, and then you'd have accumulated depreciation. Maybe I could call this balance / carrying value. Okay, and then you'll have cost and accumulated there as well, and then you'll have adjustments for additions, depreciation, and disposals, if there is. Okay, that's your PPE notes. Does that make sense?
Yep.
Okay. Right, so see, that's what you would study. You would study format, so you know what these things look like. Okay, and then now I'm ready to do the question. Okay, same approach, same technique. Go to the question, get the easy marks. Alright, so I think maybe you do this first. Alright, great. So you've gone to the list, you know what they are. Let's check. Okay, this is how I would do it. I would literally pull those figures through to where I need to put it. Right, capital is what? Capital. Capital is part of equity, so that will go here. Under equity, capital. Alright, I'll show a bracket. I write down the amount. 152,396.
Yes.
152,396. Okay, the next one is drawings. So then drawings will be minus drawings
28500.
Okay, 28500. Okay. Next, trade receivables, which is a debtor, which is a current asset. So then I write down trade receivables. Okay, and I'm going to write in the amount. What is the amount?
101280.
Okay, just checking. I thought it was off. Alright, so trade receivables is 101,280, 101,280, 101,280, great. Next bit, vehicles. What is it? Special. It's part of property, plant, and equipment. Okay, so because you're doing a note, remember the note is referenced where? In the actual statement. So I'll write this here. And you would write down note number 1, whatever it is. Okay. Right, that's what you do. Right, so this figure is going to be basically the total here. Okay. Alright, so vehicles is special, it's at cost, so it's going to go here as a column. Okay, what did I start with? 176. Is this end or beginning though? It's an extract. What was the year end? 30 June 2016. What did they give me here? 30 June 2016. So you're actually looking at the end. How much is it? 176. 176,050. There's it. There's the costs. Okay. Then what? Let's see. What's next? Accumulated depreciation vehicles. There. 1st July 2015. That's beginning. 52,850. 52,850. 5285. 52850. Great. Okay. Then I've got inventory. Trading stock, 1 July. What is that?
It's an asset.
Correct. Current, right?
Yes.
Opening stock. Do I show opening stock here? No, I don't. I show closing stock here. Okay, NB. Closing stock is disclosed here. Disclosed. Okay, so I don't show opening stock. They probably got periodic here. Okay. Next, bank. Bank is a asset. Debit balance, yes. Bank, how much? 28? 260. Mortgage, we said was a liability, 140. Liability, non-current mortgage. How much? 140. There's the 140. What else? Loan from Africa Bank. Liability 13,600. Commission income. Okay, that'll affect your profit. So capital. Okay, there's your capital line figure there. What is that? Okay. Okay. I think it's a bug.
Yeah.
Yeah. Okay, so capital. Here you're going to add asterisk the profits. Profit C calculation. Right, so I am going to need a profit calculation here to work that out. So let's do that on the right here. Profit calculation. I've got commission income here. Brackets. Commission income. How much? 9,000. Okay. Insurance expenses.
4284.
Insurance 4284. 4284. Packing material. What is it?
44,000.
44. Rent income.
44,000. Sorry.
Mr. Zero. Okay. Rent income.
It's 32,500.
Income 32.5. And water and electricity. 2550. Great. Right, so you've got all of that. You've written that where it needs to go. Then we need to look at adjustments. Okay, the following adjustments must still be taken into account, meaning we have to provide for them. Okay, on 1st June, trading inventory on hand amounted to that. There's your closing stock. Now I can put it in. Closing inventory isn't going to change. It's the stock count, 44,875. There's the stock. Easy mark, knowing to where to put it in. Average monthly rental income for 2016 is 3,000. Right, so how many months in a year? 12 months. So 12 times 3 is 36. So there should be 36,000 here. Where's my rent income? I've only got...
it's just the bug.
Yeah. It's a massive bug. Okay, so the rent income we said was how much? 3,000 times 12 months, which is 36,000. Do you agree?
Yes.
36,000 is how much I need to show. How much am I currently showing?
32,500.
So I need to add 3,500. Okay, to make this 36,000.
Yes.
Okay. If I'm adding it, that means it's accrued income, income that you haven't received. You debit accrued income and you credit the rent income. So accrued income is a current asset. Accrued rent income, open brackets, 3,500. Okay, there's an adjustment. That's for that one. Okay, average monthly rental, meaning 3,000 Rand every month gives you 36. 36,000 is how much I should represent in my books, but I'm not. I'm only showing 32. So I need to show 36. The balance is still owed. Income that's still owed is called accrued income. Okay. Next. Packing material on hand. That would be a stationary type of adjustment. Okay, so if it's still on hand, meaning you still have it. So packing material is going to be subtract minus how much? 6,300, and then that'll be a current asset. Packing material on hand. Open brackets. It was
6,300.
yeah, 6,300. Okay, what's next?
Commission income.
Okay, if it's still outstanding, you tell me what to do. Still outstanding meaning?
It's accrued income.
Income, exactly. Good. Okay, so commission income. Still outstanding. Add it here. How much?
3,600.
Okay. Accrued income. So I've got accrued rent income. You can group all of these as one. I'm showing them all separately. There's nothing wrong with showing it as one line item. Excuse me. Okay. Accrued. What is this income? Commission. Commission income. Open brackets. How much?
3,600.
3,600. Got that. Okay. There's it there. Okay. So now we've looked at that. We've looked at that. We've looked at that. We've looked at that. Water and electricity. 500 still due. What does that mean?
It's accrued expense.
Good. Plus how much?
500.
500. Okay. If it's accrued, it's going to go down here. Accrued water and electricity expenses or expense 500. Got that.
Yes.
Next, what is it?
The mortgage was obtained from XYZ
Yeah.
Bank during the previous financial year.
Okay, so when you see this, you know you need to draw up a timeline because there are dates. Right, that was the previous financial year. Bears interest at 11.5, compounded annually. Interest for the current year must still be provided for. So there's accrued interest. The loan is redeemable on 1 July. Interest is not capitalized, but paid to the bank. So if it's not capitalized, it is accrued interest. Okay, so draw a little working here. We can actually write it down here because it will be taken off your profit. Interest on what asset was this? The mortgage. Interest on mortgage. Okay, what is the mortgage amount? Where's the mortgage? Here's the mortgage, 140,000.
Yes.
Okay, so 140,000 times, what is the interest rate?
11.5%.
11.5% per annum. Okay, so 11.5% per annum. Okay, so 140,000 times 0.115 gives you 16,100, which is accrued interest on mortgage. 16,100. Got that?
Yes.
Okay, next. The loan.
The loan from Africa Bank is unsecured and bears interest at 19.5% per annum, compounded annually. Interest for the current year must still be provided for.
That's important.
The loan was obtained at the beginning of the current financial year and is repayable on 1 July 2016.
Okay, if it's repayable 1 July, is this short term or long term?
Long term.
Short term, because that's the next day. This is end of June. Okay, so it's the next day. Right, so that means this loan, where's this loan? Loan from Africa Bank. So this loan needs to move. This loan needs to move there. Okay, why? Payable.
Yes.
Makes sense.
Yes.
How much is the interest? 19.5.
Yes.
When did you take out the loan? Beginning of the current year. Okay, so interest is the full period. Okay, so let's write that down here. Interest on Africa Bank loan. Brackets. How much was it? 13,600. 13,600 times 19.5. Okay, so where were we? We're looking at this one. The interest on the loan from Africa Bank. Okay, so the interest on the loan from Africa Bank was 13,600 times, what is the rate of interest? 19.5%. 19.5%. Close brackets gives me an amount. 13,600 times 0.195. Okay, gives me that amount of interest. Right, what is that? It's an accrued interest amount because they tell you that it's repayable. Oh, they say the interest is capitalized, so that means I have to add it to the value of the loan. That's important. Capitalized means added to the value. Okay, so this loan from Africa Bank is going to be added to the
2652.
exactly. Okay, now we've looked at that. Next, debt who owes the business declare insolvent. That's bad debt. Bad debt will be written off. 46. So bad debts 4640.
Yes.
4640, and that's going to come off your debtors. Where's my debtors? There's my trade debtors, receivables minus 4640. Okay, next bit. The insurance amount includes the premiums for the months of July and August. Is July and August part of this year?
Yes.
No.
It's 2016.
2016 is next year, because this year ends when? End of June. Okay, so this is prepaid expenses. Prepaid expenses, open brackets. How many months have you prepaid? 2 months, July and August. So this insurance amounts here is for how many months? 14 months. Do you agree?
Yes.
So 4284 divide by 14 times by 2. Close brackets. Gives me an answer of 612. That's the prepaid prepaid. So that minus 612. Okay, so you're taking off the prepaid insurance and you're recording the prepaid insurance, debit and credit. That's why I'm doing it this way. Okay, that's complete. That's complete. 10. Last one. Provision for depreciation of vehicles must still be provided for 20% per annum, straight line method. Notice though, a new vehicle was bought. For that, an existing vehicle was also disposed of. See, sold. The original cost price was that vehicle. Okay, so now we need a timeline. Right, so this is an asset disposal. Here's your difficult part of this question. Okay, so let's start. Beginning of the year was 1st of July 2015. End of the year was 30th of June 2016, right? That was the financial year. That's the start. That's the end. Is that okay? Right, so what date did they give you in the question?
What do you mean?
What date did they give you in the question there? 1st of March.
Yes.
Okay, so when did I actually sell the asset? Oh, well, I bought an asset. Okay, so you bought and you sold.
On the same day.
Yeah, so I bought an asset on the 1st of March 2016. Okay, for how much? 30,000. Okay, that's what you bought. Okay, that's the new asset. What else happened? I also sold an old asset. The original cost price of this asset was 60. So that was buy, and then we also sold. Okay, the cost and the accumulated depreciation. Okay, and the carrying value. Right, so I sold an asset for how much?
15,000.
That's proceeds, sold for an amount of 15. So proceeds, 15,000. That's how much the asset gave back in terms of a sale. The original cost price of this vehicle was 60,000. So cost 60,000. The vehicle was exactly 2 years in use on 1st of July 2015. Now the adjustments were provided for. So we need to look at 2 years of depreciation. 2 years old. Okay, what else? That's it. They said you may assume that the total comprehensive income for the year after all the above adjustments amounted to that. Okay, that really helps. So then you don't have to work out this. Okay, I was going to try calculate this
Yeah.
profit for the year. Okay, but it's given at the end of the question. Okay, so then I would just write that down and I would say, what is the profit? 3029. Okay, so now I can update this. This capital amount here is going to be 3029. Got that?
Yes.
Okay, so that's the 3029 that goes there, capital. Okay, and then we need to finish off the depreciation. Okay, so I've got that much. Okay, 2 years old. How am I depreciating vehicles? 20% per annum, straight line, right? Okay, so if it's 20% per annum, it's on the cost. Okay, so 20% times 60,000. Okay, is depreciation for 1 year. Do you agree? Okay, so 60,000 times 0.2 gives you 12,000. Right, perfect. So we've got that. This was depreciation for 1 year times by 2 years gives you 24,000. Do you agree?
Yes.
Okay, so that means the accumulated here is 24,000. Carrying value would be the cost minus the 24,000. So that's the carrying value of the asset. Okay, so how much did you sell the asset for? 15. So did I make a profit or a loss? There would have been a loss on sale.
Yes.
Loss on sale of 36 minus 15. Okay, 21,000. Right, but the loss on sale would have been part of this calculation. Okay, loss on sale of an asset. Okay, we didn't actually have to draw up this calculation because they gave us the final answer. Okay, so I don't actually have to do that, but I'm just showing it just in case if it was a different question you would have to do it. Okay, what you do need to show though is the sale. So I sold this at carrying value. Carrying value was 36,000. That's the disposal. So that goes into your PPE note because disposals at carrying value. Okay, so the vehicle was disposed at an amount of carrying value 36.
Yeah.
Okay, so there's the minus 36. Okay, depreciation we still need to work out. Okay, so go back to the question. Do I have this asset? Yes, I do. Will there be depreciation on that asset? Yes, there will. Okay, so 30,000 times, what is the rate? 20%.
Yes.
Times March to June. March, April, May, June. 4 months. 4 over 12. March, April, May, June. 4 months. Okay, that gives you an answer. 30,000 times 0.2 times 4 over 12 gives you 2,000. Okay, did I hold equipment for the full year? Well, this equipment I used for part of the year. Okay, that was, they said here it was 1st July. The vehicle was exactly 2 years in use on the 1st of July. Oh, okay. 1st of July was here. That's a mistake. This needs to go here. Okay, that's what they said. So carrying value there was that amount. Okay, so then I need to move that forward. Okay, for that period there. Right, did I use this old asset for part of the year? Yes, I did. I used that asset for old equals it's the cost, so 60,000 times 20% times July to March is how many months? July, August, September, October, November, December, January, February. 8 months. 8 over 12. Okay, gives us an amount of 60,000 times 0.2 times 8 over 12 gives us 8,000. So 8,000 is what we actually need to add here. So this would be 36 plus 8 gives you 44. Wrong place. This plus that gives you 44. 60 minus 44 gives you 16,000. So there's still a loss, but only a loss of 1,000. Okay, you sold a 16,000 rand worth asset at 15. Okay, so I had to fix that. Did that update here? Yes. Okay, dispose at carrying value 16,000. Okay, so we need to show the depreciation. We've got one there, we've got another one there. Okay, cost was 60,000. What other vehicles did I have? Where is it? Vehicles that cost there. 176050. But this was when? At the end of the year. Do you agree? Okay, so that was the cost here at the end. Cost equals 176050. Okay, that's at the end. I bought an asset during the year, so that means I would have had 1 for the opposite. So this minus 30,000. Do you agree? That is what I would have started with. Okay, so I started with 146,000 in terms of vehicles. I bought an extra 30 during the year, and then I ended with that. Okay, it'll actually be 146, which is the existing, still owned. Okay, you still own that. Okay, because this was how much you had at the end after having sold a portion and after having bought a portion. Okay, so your starting would have been plus add the asset sold. Okay, and the asset that you sold, the sold asset was how much? Was 60,000. Okay, so then obviously what you would start with here was the total. So the total would have been this plus that, okay, in terms of the cost price. Okay, so that we can put in our diagram. 206050. Diagram, cost, this is going to be the cost. That's the cost. Okay, additions, I bought how much? 30,000. That's easy mark. Bought a 30,000 rand asset. Depreciation is going to equal all of it. So where's the depreciation? It'll be this plus that plus the asset that I still have there. So I'm going to put that here. Okay. Existing depreciation is going to be 146050 times 20%. equals, so this times 20% is 29210, adding that 29210, yeah, so 39210 is the total. It's this plus that plus that. That's the total depreciation. Okay, so we've got that now. We've got the vehicle. The carrying value here would just be this minus that. Cost minus accumulated. Your cost at the end was that. Accumulated at the end would be what? Well, we need to work that out. It'll be what you had at the beginning. Okay, so this figure is what I had at the beginning. There's my accumulated plus more depreciation minus the depreciation on the asset that I sold. There, accumulated depreciation on the asset that I sold. Okay, it gives me that balance. So this will be this minus that. Okay, it gives you 0. No, it can't give you 0. This minus that. There we go. 127. Okay, and then that should be correct. Let me just check it. If I take this balance plus the additions minus the depreciation minus the disposal, yes, you get the same answer. So it is right. Okay. Right, so that is a negative. That is a negative. Those are negative amounts. Okay. So there you go. That's vehicles complete. Was there anything else in this question? No, that was it, eh? Yeah. Okay, so now I can take these figures through. So property, plant, and equipment is just one line item. It's just this figure. Okay. Let's go back and check the rest. Okay, so trade receivables, we need an amount here. Okay, bank, rent, that's one, that's one. Okay, so current is going to be equal to the sum of all of those amounts. Okay, so then I've got my current. My non-current is the same as my current. Okay, then obviously non-current and current gives you total. Okay, so non-current plus current gives me that total. Okay, then capital, get an amount here. Mortgage, 500 there, 16,100 there, and then this needs to add up. This total's not right. Add up all of it. Okay. Let's see what we get here. Equity is this, that, this, plus that, gives you 32. Okay, so total liabilities would have been non-current plus current. Okay, those two added together. And then equity and liabilities give you total equity and liabilities. This plus that. Okay, it gives you 2,9. I'm out by a bit. Let's see, what am I missing? Missing 12,000. Where was the 12,000? I'm missing 12,000 here. I forgot to record a 12,000. Where was 12,000? Okay, so 12,000 is not here. So then what we should do is check this, the commission income. let's check their total and see what their total is, because sometimes they give totals that aren't correct. Okay, so if I adjust all of this, okay, because these were all the adjustments that I processed, I should be getting the amount that they had there, the 3029. Bad debts was 4640. The loss on sale, loss on sale, that was only 1,000. Okay, so that needs to go. Okay, and this is what the question gave. I just want to see what I get, and then we check the balances. Depreciation. Okay, depreciation here was equal to the depreciation there, and at the loss on sale. Okay, so if I sum up all of this, okay, equals, okay, not sum up actually, total up. Okay, so in other words, profit. Okay, profit here is what I should get. So income minus insurance minus packing plus rent income minus water minus interest minus bad debts minus the loss minus the depreciation. Okay, that's what I get, and that's a loss. That's the commission income. Was anything else here? Yeah, I'm up to about 12,000. What is 12,000 for? Let's see. What could it be for? Let's go back and have a look.
Well, this question doesn't even make sense to me, so...
Did you find it difficult?
Yeah, I have no idea what's
Okay,
going on here.
it's just disclosure. So obviously you can get the easy marks, right? Posting all the stuff through should be fine. Okay, like what we did at the beginning.
Yeah.
Alright, obviously later on it got complicated because we had to work out the depreciation stuff. Okay, as long as you're getting the easy mark, that's key. Okay, because that's what you need to do, is just get the marks that are available, the easy adjustments. Okay, you've got the question open there, just go to the top. Okay, there, stop there, go down. Okay, so capital was,
152,396.
okay, that's there. Keep going, next, drawings,
This is 28,500.
fine,
Trade receivables is 101,280.
good.
Vehicles 176,050.
Okay, 176,050 is the cost at the end of the year, which is that figure. Fine, next.
Accumulated depreciation of vehicles.
Okay, there. Okay, so that was when? Beginning of the year. I need to add that to my diagram. So this was the 1st of March, is during the period. That would have been at the end of the year. There's the starts. Okay, starting there. Okay, so this all needs to shift down. The spacing got moved because I deleted lines. Need to put the lines back. Come on, a little bit more. There we go. Okay, so this is our diagram. Okay, so I need to put that figure here. Start, that was the start. So at the beginning, start accumulated depreciation was, what was that figure? 52,850. Okay, there's one figure that I didn't put in mine. Okay, we'll adjust for it just now. Let's just see if we've got everything else.
Okay,
Inventory's closing stock. That was opening stock.
1 July it's opening.
Okay, so opening stock would have been part of the cost of sale calculation. That would have been part of the profit. Okay, so see, yeah, you can't actually calculate the profit because you had opening stock. Okay, you need to calculate purchases, inventory. Okay, so that is something that you can't actually do. That's probably why they gave you the answer to the profits. Okay, keep going. Bank
is 28260.
let's see, do I have 28260? 28260, yes. Next.
Mortgage is 140,000.
Got that. Next.
Loan is 13,600.
13,600 for the loan. Yes.
9,000 for commission income.
Commission income. 9,000. Fine. Next.
Insurance expenses.
Yeah. Got that.
4284. Packing material.
Packing. Got that.
Rental income.
Rent income. 32. Got that.
Water and electricity expenses.
Got that. Okay. So let's look at the adjustments. Keep going down. Okay. So number one was inventory amounting to 44, which has to be disclosed there. That's fine. Okay. The monthly rental is 3,000. Average monthly rental. So 3,000. We did that working. 3,000 times 3 is 36. The rent that you've paid was that. The amount that's left over is that. Yeah. And we provided for 3,500, which was the accrued rent income. Yeah, that is there. That's fine. Next.
Packing material on hand.
Okay, so if it's packing material on hand, it's an asset. It goes there, and then you would minus the packing material, which I did do. Next. Commission income, still outstanding. So commission income is accrued income. You add it there, and you add it there. That's fine. Next. Water electricity is outstanding. Water electricity, it will be a liability. You would record it there, and you would add it to your water electricity. That's fine. Next. The mortgage.
Was up to.
Okay, let's check the interest thing. Okay, where's my mortgage calculation? The mortgage was down here, I think. No, it wasn't. Oh, it was here. Interest on mortgage. Okay, what is the interest on mortgage? 11.5% compounded annually. The loan is redeemable. It's payable to the bank. It's capitalized. Interest is not capitalized. Okay, so the mortgage was 144,000 times 11.5% gave me 16,100. Did I have interest on mortgage in the question? No interest here. So the full amount will be an accrual. Did I put the accrual in? Yes, I did. So that's also fine. Next.
The loan from Africa Bank is
Yes.
unsecured.
19.5%. That's 19.5% on the loan. The loan balance was 13,600. That's fine. Then I times it by 19,000. That's fine. Gives you this amount there. Is that the right amount? Times 19.5. Yes. Okay, so that goes as an accrual, which was capitalized. So I added to the value of the loan. That's also fine. Next. A debtor was insolvent. So the debtor is insolvent. You would subtract that from your trade receivables, which I've done. That's fine. Insurance includes premiums of July and August. Insurance is that. We did work it out correctly. That was 2 months. That's also fine. And then provision for the depreciation. Okay, it's probably just the depreciation. Let me go back and check that. Okay. Oh, proceeds. I didn't record the proceeds. Sold for 15,000, right? 15,000 will do what to your bank? Increase your bank. There's one mistake. Okay, so bank. Where's my bank? There's my bank. Bank is going to go up by 15,000 asterisks from the sale of the assets. Assets sold. Okay, so we need to add 15 here. 15. Undo. Add 15 to this. Plus 15. Okay. Right, so that gives us that. Now I'm out by 27. Okay, so the depreciation we need to check again. 20% per annum straight line method. New vehicle bought. Oh, there we go. New vehicle bought for 30,000. So bank is going to decrease minus 30,000 asterisks asset bought. Okay, so minus 30,000. Now I'm 3,000 out. Okay, so let's find the other 3,000. Okay, an existing vehicle was disposed of and sold for an amount of 15. We got the 15. Original cost price of this vehicle was 60. The vehicle was exactly two years old. None of the adjustments were provided for. Okay, so all I need to do is just check the amount here. Okay, so this was we bought a vehicle, we depreciated. Do we need the depreciation? We actually didn't need the depreciation because okay, so this was all fine. This tied up fine. That was the amount, the additions. We're just missing 3,000 somewhere. Let's see. Okay, that's carrying value. That was 8,000. Is there anything else here that we would need to disclose in the statement of financial position? No, there wouldn't be. And we had the depreciation at the beginning. I did put the depreciation at the beginning, so that was fine. I recorded it there. Yeah, okay, so the PPE note is fine. It's just this side I'm looking for missing 3,000. So 3,000, this side is too small, this side is too big. So either liability of 3,000 or an asset of 3,000. Let's look. Nothing there. It might be this thing. Average monthly. The average monthly rental income. Let's just try to understand that. If it's the average monthly rental income, average meaning it's what I paid for the year, and that was 3,000. Average monthly rental income for 2016 financial year is 3,000. How much was the rental in the question? The rental in the question was 3,250. 32, yeah, 32500. Okay. Divide by, no, you're not dividing by, it's 3,000 times 12 is 36, minus the 32500. Yeah, 3,500. Unless you don't have to show that. Let's think about this. Now I would want to show it because it says average monthly, but see, average might not be average. Average just says, well, on average you paid 3,000 a month. Was that exact? It's difficult to say if that was exact or if it was an average. Yeah, that's the only thing I think that could have been a consideration, because the rest was fine. Water and electricity, I did record water and electricity. Accrued water and electricity of 500, yeah. Okay, so alright, yeah, I'm not too sure where the 3,000 is. I'm going to leave it as is. I'll have a look at it again and see if I can find the missing 3,000. But yeah, the rest is fine. So there were one or two things that I left out initially when we first went through it. It was this. Okay, all the payments. Right, that was something I should have recorded. The asset that you sold goes up, and then you obviously bought an asset. Okay, that was something we had to add in. Okay, but the rest was fine. I'm not going to change any of the rest. It's still out by 3,000 though. Okay, normally you'd want to see those two things balance. Okay, but I'll check it and I'll have a look, and if there is a problem with it, then I'll update it. Okay.